good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Nikunj Dalmia. And for now, the market is sideways. We're actually off the highest point of the trading session, but we're off the lowest point as well. So just in between that range. 24,150 is what we are staring at right now. The Bank Nifty is under pressure, clearly underperforming. That index down almost 100 points as we speak, and the broader market too is a bit skittish today. There for you on the screen, a cut of almost 0.5% coming in for both the mid cap and the small cap. So it's the broader market which is bleeding a bit more. Within sectors, there's definitely quite a bit of strength today in IT. I mean, the top performer at the index level is TCS with that 2% gain. HCL Tech is doing quite well. Infosys, Tech Mahindra. So 4 out of the top 5 Nifty companies are actually coming in from the IT pack. And then, of course, M&M is also fairly in action. Divi's Lab is coming under pressure, Coal India, Hero MotoCorp. These are the other big names. And from the broader market, just wanted to highlight Policy Bazaar. That stock has seen quite a bit of traction at the moment, 6% higher. In fact, the entire new age vertical, take a look at Paytm as well for that instance, 5% higher. You also have a lot of smaller IT companies like Sonata, Cyient, Infocus. So overall vibrant if you're looking at specific pockets, but otherwise a bit dull at the index level. Naresh is also joining us with, joining with us on the show. Naresh, hi, good afternoon. What's the take on the market mood? It is expiry day, but it is, missing the sparkle per se to speak.
Yeah, so looks like a flat day all through. It's been a barely a 80-100 pointer range for the Nifty for the whole day. And for a 24,000 index, that's a pretty small range. Also, the fact that tomorrow is a holiday and then we have US CPI numbers in the evening, which could lead to a 1 to 2% move in the US indices in the evening. So we go into Friday pretty flat. So I think we would get a more clarity in terms of trend, whether we get towards 24,500, 600 or towards 23,900 on Friday rather than today. So expecting this to continue, maybe some bit of volatility in the last 30 minutes for expiry, but overall the consolidation continues on the markets.
Naresh, today the surprising factor is coming from large cap IT and especially TCS. And who would have thought that they could be the rescue heroes? How should we read into the price action into TCS specifically?
So TCS on a structural basis is interesting because if we look at the price action, the all-time highs for the stock is at 4,400, which was recently made. The highs back in 2021 was closer to 3,900 to 4,000. Then in February, March also it was closer to 4,100, 4,200. So holding on to that 4,100 mark is an indication that the stock is finding a base here and slowly trending up. So out here, maybe we could be testing that 4,400 to 4,500 mark in the short term. So a good indication here. Same is the case with an Infosys, which after making a move towards 1900 has been holding on to 1750 mark, which was the high back in February, as well as in 2023. So the structure is positive. Momentum is not great, but tells you that we are finding a base in IT and the range could be higher than what it was before. So a new range could be forming out for the large cap IT space. So the recent lows could hold and maybe we hit a new 52-week high in some of these names.
Okay, point. Highlight a few more buzzers. Mazagon Dock has actually managed to inch up in the last few minutes. Let's pull up the intraday chart. Cochin Shipyard has suddenly taken a huge spike as we speak. Garden Reach Shipyard as well. In fact, we did speak with the management of GRSC earlier in the day and we'll play the soundbite for you shortly. But warrants attention, even data patterns for that matter, MTAR Technologies, the entire defense pack. And Nikunj, I think it could partly be on account of the numbers that we saw from HAL come by, which look interesting on a year-on-year basis. But if you look at it on a quarter-on-quarter basis, there is a sharp decline as well, and perhaps that's the reason the street is digesting that number. But defense is getting a bit too overheated in terms of valuations, and earnings this quarter at least hasn't been secular in terms of outperformance.
See, with any defense company, you cannot pick up a trend. Why? Because when you have to understand, I understand 2-3 companies, so I can share that. Let's say you look at HAL. Depending on where the aircraft delivery is, your profits would be different. It is not like a linear business where you're selling it's not an IT company where linear
every quarter that you'll have.
Similarly, if you've really, delivered a ship, you definitely will see huge bump up comes in that particular quarter. B, these are businesses where the big picture argument is so strong. And what we heard from the management of Garden Reach, when we spoke to the management of RVNL or for that matter other shipping companies, the big picture argument is so strong for them in terms of the government push that for next 2 or 3 quarters, you know that the business is not at risk. The valuation risk is the risk which is the only risk in some of these companies. It is not a business risk. And a pseudo correction, if I may use, I think has already kicked in, or a subtle correction, or something which is not getting noticed. Look at HAL. 5,400 rupees stock has become 4,600. BEL, again a 10% shave off. We were looking at a long list of PSU stocks, especially in defense and railways, which are down and out by about 10 to 15%. So you don't talk about it, but you need to acknowledge it, that the RARA momentum which is there, I think seems to be coming to an end. And also you must ask yourself one question is that what happens to some of these defense stocks after all those NFOs they shut? So a lot of NFO money is coming to the market. Motilal Oswal, HDFC, they've been shopping, and they've been shopping in defense stocks. And now none of the new defense NFOs around the corner. So the specific money which was the mandated money which was coming to these NFOs or to defense stocks, that takes a backseat.
Right, and talking about defense, actually, HAL came out with its numbers a short while ago. You also have now Mazagon Dock, which has come out with a number, a spectacular rise in the profit coming in from Mazagon Dock. If you see the stock, that's one of the reasons why I saw a sharp spike, about over 100% uptick coming in for Mazagon Dock in their profit number, 696 crore rupees. You have the revenue seeing an uptick of about 8.5% or so, coming in at around 2,357. But the picture over there seems a bit different when you talk about the operating performance coming in for HAL. While you've seen a sharp jump in the profits for HAL, about a 76% jump in the profit on a year-on-year basis, the margins have only seen a mild 39 basis point uptick on a year-on-year basis for HAL, and maybe that's one of the reasons why the stock is a bit tempered as of now. But we also spoke to the management of Garden Reach earlier in the day. Let's hear what they had to say about the margins and also the fact that what's happening globally, how will it impact their business?
Exports is the focus area definitely of the government of India, and so we as an appendage of the government, it is an equally focused area for us. Our order book is 230 crores. We have 2 projects currently running in Bangladesh. The order value is just about 1.2% of our order book. That is one. So the impact is insignificant. As I have been consistently maintaining, we will maintain margins above 8%.
Okay, so that's about the entire shipping industry and how it's expected to kind of turn around for the next few quarters. On the losing side, Piramal Enterprises is coming under pressure, and this is one stock that has consistently managed to disappoint the street. A lot of other NBFCs are as it is under pressure, but this one has taken quite a bit of knock. A couple of downgrades also have come by. But Naresh, what would be the view on the charts for Piramal Enterprise? Is it a buy on dips or a complete avoid?
So it's almost a complete avoid because this is yet again another time where it came closer to that 1,100 mark and has collapsed again. So back in last year also it made a solid recovery from 600, 800 levels to 1,000, 1,100 and again flopped. So out here, till the time it does not stay above 1,100, the trend remains weak. On the downside, 850 is a support, so that is still far away. So closer to 850 is where I would expect a support, and there could be a buying opportunity for a bounce back. But at current levels, not a buy.
A terrible patch of volatility for Piramal Enterprises. In fact, none of the NBFCs have actually lived up to the reputation of what they can actually achieve or what they could have done. With the exception of maybe a Bajaj Finance, a little bit of gold companies here and there. That's about it. I mean, nothing very large. What's looking interesting to me, if I look at the aggregate picture, let me take a breath, see if I can spot something interesting. Edelweiss is trending up on very strong volumes today. I don't know why. I must confess ignorance here. I don't know. What is coming down on strong volumes is Suzlon. Naresh, it's a difficult stock to call. I mean, there was a time when markets loved it. There was a time markets hated Suzlon. Suddenly the stock is now clocking very strong volumes. Where is the stock headed? It just moves from circuit to circuit now.
So the stock has done really well from single digit all the way to 80 plus levels. Now it's a 1 lakh crore market cap company. And I think in the peak back in 2007, the stock was maybe 1.25, 1.5 lakh crore market cap. So post the prices may not look that huge but the stock is almost back to 2006-7 prices where it started off. So at 80 to 90, I think this could be a time where the stock could take a pause. So out here, maybe a dip back to 70 is what I would expect, and a new range at 70 to 90. So not a buy at current levels. And given that a big market cap has been touched, it's just that it has a large float, so there is a lot of ETF-based buying as such. So the public float out here is almost 50, 60, 80%. So that gives it a very large free float. So we see a lot of ETF flows which have continued on the stock, but at current levels, the risk reward is off, and the market cap is pretty large also.
That's the take coming on Suzlon. On that note, let's slip into a break on this edition of Closing Trades. When we come back, we'll track the markets more closely and tell you what are the BTST ideas to watch out for.
Vipin Mehta on where he feels markets are headed, some of his top ideas, and where is value in the market according to him.
There have been interesting concept stocks which have got listed. One like this Zaggle Prepaid, then there is RateGain Technologies, Ola Electric, to an extent. These are the companies which I think are have very different business models, and I have always had good returns from such companies. They've turned out to be multi-baggers for me. For the record, I invested in Zomato around the IPO, and I've been seeing fabulous returns over there. Companies even like Policy Bazaar, who knows, even a Paytm. So that's one section of the market where I'm keeping a close eye on, and where I feel that interesting from a value perspective has emerged. Then we may invest over there for the long term. And long term, I mean 5 years, 10 years or so, those kind of ranges, because that's when you get 10, 15, 20 times the return. The second, I think, space which I again disclosed to you is pharma. Something interesting is happening over there, and you have the benefit of good corporate governance standards. You have the benefit of very aggressive managements, good quality balance sheets, low debt, M&A opportunities. Company like say Mankind Pharma, Dr. Reddy's, Kaplan Point, Ipca Labs, Ajanta Pharma. These are the interesting companies that we're looking at, to increase our exposure over there. As a disclosure, we may be investing or be invested in all these names.
So that's a word coming in as far as Dipan is concerned, and the stocks and the spaces that he's liking at this point of time. But quickly taking stock of the markets, because there is a bit of a dip that has come in the last few minutes. 24,140 is where we are at. I think it's the heavyweights itself which are coming under pressure. So Reliance, etc. will come up for you on the screen, as well as, of course, the banking index, which wasn't batting for the bulls in any case. So ICICI Bank, Ultratech, Coal India are the other names that we are tracking. Chakri Lokpriya with us on the show as well. Chakri, hi. My colleague Anurag has been talking about a story on insurance wherein he believes that the companies will have to take price hikes, and that is something which is likely to happen over the course of next few weeks itself. Now, insurance over the last couple of months has become quite interesting for investors because the overhang seems to be over. Do you still think the story is not fully discovered and priced in, or do you think perhaps the best is in price already now?
Good afternoon. Thanks for having me. I think the price hikes largely reflect the increased costs that they're mandated to do now. They have to cover for existing ailments, and all that is good. And there's also, of course, the price revisions faced by the insurance companies are periodic versus other prices. Medical costs are going up continually. So all things adjusted, I don't think the price hikes of whatever the 7-10% is kind of take care for the risks and the cost increases, but not really add to the profitability.
All right, let's move on then, and let's talk about what exactly is happening with regards to post-budget movement. Looks like there is a meet lined up with the bankers as the finance ministers meet with the bankers to take stock of situation. We have Prakash who's here to tell us exactly what is likely to be discussed in the meeting with the PSU banking names. Prakash, over to you.
Yes, we are learning from our sources that the finance minister will be meeting with the heads of the public sector banks and regional rural banks next week. We are given to understand that the FM will chair a post-budget meeting with the PSBs and RRBs, and the performance of the PSBs and the RRBs will be reviewed based on various parameters. So there'll be two separate meetings, one with the PSBs and then with the RRBs same day, where various issues are likely to be discussed. FM is likely to review the steps taken by PSBs on deposit growth and NPA reduction. Along with that, steps related to improvement of digital infrastructure, cyber security are likely to be reviewed. In addition to that, FM is also likely to take stock on progress made regarding credit growth for sunrise sectors, opening of new branches in remote areas. The instructions had already been given to the public sector banks. Along with that, the performance of flagship schemes like PM Swanidhi Yojana, PM Mudra Yojana, PM Vishwakarma Yojana are likely to be reviewed by the finance minister. When it comes to regional rural banks, the most important thing is digitalization. We are given to understand that the steps taken by RRBs regarding digitalization are likely to be on agenda. Issues related to adoption of technology, loan management system in RRBs may be discussed by the finance minister as well. Back to you.
So that's a view coming in as far as the banking names are concerned. Shrikant Chauhan is also with us. Shrikant, we were just talking about the data as to the PSU stocks have come off materially, their peaks as well. What within PSU should be the first port of call to sell, and what could you continue holding? What's your view?
Good afternoon, everyone. I think, see, like for PSU banks, most of these stocks are underperforming and they are not following to the broader trend of the market. But while looking at the entire setup of like few selected stocks, then in that we feel this Punjab National Bank, which is currently around some 113, 114 levels, there we are seeing a good amount of distribution and it is consistently failing to sustain at higher levels. So from here, the stock can fall to the levels of maybe 100, 102 sort of levels, where it had support of previous important consolidation zone. So PNB looks weak, but otherwise, I feel State Bank of India is the stock on which we need to keep a close watch, because the stock from here can fall to the levels of maybe 770, 775, but there the stock is having excellent support. So buy on dip correction should be the strategy for State Bank of India. But at current levels, I think we need to reduce long position in PNB or Bank of India also.
It's not turning out to be a bad session if I look at the breadth. If I look at some basic indicators of strength, they are looking reasonable to me. And I'm looking at global indicators, NASDAQ, 10-year, dollar index, CBOE VIX, all of them are indicating that the storm in the global market essentially has come and gone. What looked like a very perfect stormy scenario when the yen carry trade started unwinding, from there versus now, I think you have come a long way. I mean, this market has passed 3 litmus tests in my book. Budget day, election day, budget day, and then what happened to the global market. So you've seen 2 local stress tests and 1 global stress test. And that's incredible. And that holds true for global markets also, where in a sense this entire hullabaloo which happened because of it almost appeared like a stampede or a financial Armageddon if you see a market like Japan, which would be the 3rd largest market in the world now. And if that market collapses by 12-13% in a single day, and then it comes back. So, that's markets for you. What is not coming back, I think, are banks. They are on the receiving end right now. NBFCs are on the receiving end. I mean, we'll be having a special chat on NBFCs. And the other one is Hero MotoCorp, where numbers were a miss. So that one is not coming back. Nuresh, Hero MotoCorp otherwise has been a bull market stock. Is today's decline a good day to buy into a stock for those who missed buying into it?
So I would avoid, because what we started seeing in the auto pack is first indications of a pause coming in or a correction also. So it's not just Hero MotoCorp. We've seen Bajaj Auto taking a pause. TVS Motors has made a new high, but it's not been a strong move. And to look at it, Hero MotoCorp has gone up from 3,300 where it broke out all the way to 5,800 levels. So I think we would be getting into a consolidation phase where 4,800, 5,000 becomes a base and 5,500 would be tough to cross. So unless one is looking for a small trade, buying on dips is okay. But otherwise, we are getting into a consolidation mode, which could last at least a few weeks or even months.
Let's talk about what's exactly happening with the metal pack, given the fact that you had the Supreme Court order, which is now allowing the states to collect past dues. Looks like it's going to hurt the miners pretty hard, because you saw the sector at one point in time see a sharp drop around 11 o'clock or so, and thereon is tried to recover. But what's your view about these companies, especially the mining companies? Chakri?
Oh, okay. Oh, sorry. So see, I think this is reminiscent of what happened when the the coal licenses were cancelled about roughly 10 years ago, 10 years ago. And, and that led to a huge spike in the banking NPAs. For the next 10 years, the banking sector struggled. And then finally, the balance sheets are good now. Now, if you add the PSU current Supreme Court ruling, which is it's about 60,000 crores for just the PSUs. Add another 1 lakh crores for the private companies. 1,60,000 crores need to be repaid over the next, let's say, 10, 12 years. Now that completely takes away, the CapEx spends that these companies plan for the next many years, so which means the jobs that they were going to create and the NPAs that they'll create in the banking system. I think it is has multi ramifications across, right from job creation to NPAs.
On that note, thank you so much, Chakri, for joining us on the show, for giving us a view on metals as well as talking about the markets on that. And also, we will slip into a break on this edition of Closing Trades. When we come back to more stocks to discuss about, don't go anywhere.
Thanks for staying with us. We will be discussing NBFCs. Why? Because that's one space where, it's demand, liquidity, regulatory changes. A lot is changing in that space. Now, this was supposed to be the go-to space, because if India is growing, it needs capital. But within that entire space now, a lot of divergence is happening. HFCs are doing okay. Smaller NBFCs are doing okay. But somewhere in the middle, wholesale NBFCs are suffering. Viral Shah joins us, Vice President IIFL Securities, joins us live in our studio. Nice to have you. Thank you for joining us.
Okay.
There was a time when NBFCs were just trading at price to books which were higher than private banks. I distinctly remember 4 or 5 times was the norm for NBFCs. That has now gone back to levels of PSU banks, right? Completely, like 1-time book, 2-time book, 2.5-time book. Why is that?
So I think it's a combination of couple of things. See, ultimately everything boils down to the growth, especially in an NBFC format. You venture into an NBFC when you see the growth premium delivered relative to the banks or the other lenders, so as to say. Now over there, first of all, we have seen derating for banks, point number 1. So on the relative front, that also does impact a lot of these NBFCs. So for instance, if you have an HDFC bank trading at an X multiple, the better or the faster growing versions would be packed somewhere relative to that. Second is that you see that for the NBFCs as such, the mid segment of NBFCs that you mentioned, right, there is a churn that is happening. People are diversifying away from being a monoline lenders to becoming more of a diversified multi-product lenders. A la what we have seen Bajaj Finance doing and creating over the last 1 decade. Similarly, some NBFCs have been able to demonstrate that successfully, the likes of your Chola Finance, and where the market has rewarded that. People and the places where...
Sundaram also to a large extent. Great lending. Sundaram Finance.
Sundaram Finance, yeah.
Great. I mean, it's like the almost equivalent to what they've done in terms of pedigree and very low risk. But the question I want to perhaps explore more with you, and I'll just break it for our viewers. Let's start dividing NBFC space into broad categories. Wholesale, retail, gold, HFCs. How would you rate the NBFC space in terms of where there is a risk and where there is manageable risk?
So I think in the current environment, within this, I'll first make very 2 broad classifications between the secured and the unsecured space. The unsecured space is where I think the stress is rising. Of course, regulator has been pointing that out. Analysts and investors have been monitoring that, and the intensity of that, we do not see that abating as yet. We have seen what has happened with the MFI lenders, what is happening with the credit card portfolio of banks or the standalone company which is there. Even in the personal loan segment, we have seen that the stress is rising, and that is something as a space I would say one would be cautious on. On the secured space, I would be relatively quite positive on. And within that, as you mentioned, the housing finance space does look attractive. The gold financiers would look attractive, barring the fact that we saw the gold price kind of coming down because of the budget duty cuts, which can have an impact incrementally on terms of their growth. But otherwise, I think secured space is the space right now to be in, or the other segment which being the vehicle financiers.
That's interesting. But I think your work of late would have been increased by the kind of RBI circulars we keep getting every day, with today the chatter being around increasing the risk weight for the MFIs, etc. Do you think this is causing a bit of re-rating, de-rating per se in the sector, because people are worried what the next overhang or next circular could be like?
So see, I think if we look at the circular and treat that as an overhang, to my mind, that is a reactionary or sometimes proactive measure by the RBI. For instance, we have seen that the stress in the MFI segment has been rising since last 2 quarters. We have been writing about that since quite some time, and it is in response to that that the RBI is doing. So the steps that are being taken by RBI, I think they are in the right direction. The de-rating is not because of that. It's primarily to do with the stress that we are seeing coming out for the lenders which is there.
Right. So I was just going to come to that. So we've seen a rise in the slippages and NPAs in the quarter gone by. Actually, for most of the MFIs, to what would you contribute or attribute this sort of a rise in the slippages and the asset quality? Do you think that it is a cause of concern going ahead and this will not abate in the near future?
So see here, I think we have a different view versus what is actually right or was perceived rather 15 days back. We don't think that this is a transitory factor to do with a 1Q phenomena where elections were there, heat waves were there, because if we see all of those events were in April, May and afterwards, whereas the slippages that we have seen in the NPA, they could not have actually happened because of that. For it to cross the 90 DPD. So we see that this is a structural thing. We saw the delinquencies rising even in the March quarter. We have seen that actually rising even in the June quarter, and we believe that this has not yet peaked out. Reason being threefold. One, first of all, we are going to see further pullback in terms of growth in this segment. And mind you, this is a segment where when a growth is being pulled back, it has disproportionate impact on the collection efficiencies and asset quality as well. Second is that if we look at the data from all the different lenders in terms of segmental reporting people have done, we have seen that the early delinquencies have still risen in the June quarter. So it has not yet picked out, and wherein we can then talk about rollbacks in terms of NPAs. And thirdly, even in the July month, the channel checks that we do, we gather that the situation has not improved from what it was in the month of June.
So you're saying net be a bit cautious on MFI?
Yes, definitely that would be the recommendation.
So trim profits, because a lot of them have yielded good profits till now. So if you bought it at the right time, it's best strategy to maybe book some and be a bit tentative on the sidelines.
Actually, I would say that if you look at the stock price reaction for a lot of these standalone MFI companies, everyone has derated by anywhere between 30 to 50% to that degree. So may not be the right kind of scenario that you pointed out.
They actually have underperformed. You think about, see,
I
you have
think
to
maybe
look at
I'm looking at
relative.
it over a longer lens, because the likes of Spandana, Spurti, Poonawalla, etc., they had re-rated quite massively within a short span itself. Maybe from there they have come off.
Which are NBFCs which have high exposure to unsecured? Is there mathematically we can establish that?
So see, in unsecured, I would bucket everyone in two categories within NBFC space if you ask me. One is the guys who have had the pedigree, the likes of your frontline private banks. The only guy out there is one of the largest NBFC. The second bucket is where everyone else is now starting to do that in last 2 years. The second bucket is where we would be more concerned on, because they haven't had a cross-cycle experience of managing this portfolio, managing this risk. Having said that, we have seen the stress coming even for the largest NBFC as well as for the everyone else. So in that scenario, in terms of the proportion of unsecured book, Probably the names, people who have grown very fast, the one that Anisha mentioned, Poonawala's, or say for that matter Piramals of the world, while we don't cover, but generally speaking they have a higher proportion of unsecured book.
Why is Bajaj Finance growing? I mean, their book is what, how much? 6 lakh, 7 lakh crores now?
No, so they are right now on a standalone basis around 2.5 lakh crores.
Okay, my bad. 2.5 lakh crore. AUM,
On a standalone basis.
Standalone basis. But if you put everything together also, the AUM, if my memory serves
it's
me
like
right.
3.5 lakh crores.
Yeah, 3.5 lakh crores on a consolidated basis. Then that AUM is growing at 20%, 15 to 20%.
Actually, it's closer to 30% right now.
Okay, so 30% if it is growing, why is it growing? Why is that they don't have problems? Why is that they never have NP issues? Why is that at that book if they're growing at 30%? 30% if you're growing 3.5 lakh, that means you could double in 2.5 to 3 years, right? If you double in 2.5 to 3 years, that means you would be almost size of some of the banks in 3 years. Why is that? What are they doing so differently?
So see, I'll refrain from specifically speaking on this name because of the compliance reasons.
Okay.
Sure.
But just to answer your question more from a theoretical perspective, over there, see, they have demonstrated their ability to grow because of the diversified nature of their book. So if you look at the way the company is built up, they have a separate company within a company for each segment. And to answer your also on the other piece of the question, it's not like they or any other lender in the unsecured space is completely unscathed. We have seen the slippages in the retail portfolio rising even for the frontline banks, primarily led by the unsecured portfolio. Even for the name that you mentioned, we have seen their credit cost inch up in this quarter as well. And they have also sounded caution probably since last 1 year, and even going ahead, they have sounded that. So it's not like anyone is unscathed, but the degree and the extent of the pain would be very different for different lenders.
Fair point. That's a great one. Markets, thank you very much. Lovely to meet you in person. For the, Nifty is already in the green, but small and mid cap stocks are not in the green. We've retraced a lot of our losses, and if you just look at the one month chart and the 10-day chart, 10-day chart I think is a more appropriate one. There was a bad Monday. That's what everybody is telling me. Yes, there was a bad Monday. 7-day change is absolutely flat, which includes a drawdown. Or 10-day actually, let's look at it. 10-day would actually be capturing that last manic Monday's effect, so to speak. And from there, markets have been flat. So nice, steady, solid consolidation, I think, is evident in index and also individual stocks. Siddharth Khemka joins us. Let's connect with him. Let's talk about where he feels markets are headed. Why are we seeing so much of strength? Everybody is saying valuations are expensive, valuations are stretched, don't invest, save, don't invest, sit on cash, but markets are not coming down.
So Nikunj, hi, good afternoon, and wishing you and all the viewers happy Independence Day in advance. So if you look at the markets, yes, definitely a case of strong liquidity, which is supporting the sentiments, or you can say the indexes as well. But what is also supporting so far has been the strong macros that have withstood the global headwinds. And that continues to be the case, which kind of makes a positive case going forward as well. Whenever the interest rate cut cycle starts, the expectation of flows from global markets to Indian emerging markets, and especially Indian markets, that could also be pretty strong, especially given the fact that last few months FIs have been consistent sellers in the broader market, and that is a space where despite the you can say a lackluster performance by Nifty in the last couple of days, the mid and small caps have outperformed. So clearly, it's like definitely a case of very strong liquidity from the domestic flows, be it the DIs, be it the HNIs, be it the retail investors, and that is what we are also seeing in some of the new papers, the IPOs that have come out. And you would also see the appetite for from the institutional side, both domestic and foreign, for the bulk hoards of you can say OFS or blogs that promoters or PE funds have sold. We have seen huge, humongous demand for some of these papers. That only goes on to say that show that the appetite for the right quality of company and the right business is pretty strong in the market.
of you coming in as far as some of these spaces are concerned. Siddharth, what looks interesting? If I had to ask you your pecking order within sectors, stocks, anything, give us some Independence Day idea if you can, or some themes that you're watching out for the next few months or weeks as well.
Sure, Anisha. I think on a broader sectoral perspective, some of the sectors which really stand out in post the result season, the one sector that clearly stands out is the pharma space. Very strong numbers from some of the large names, and we have seen consistently now back to back 2-3 quarters where the numbers have improved sharply. On an aggregate basis, our healthcare space have delivered upwards of 20% net profit growth. So that is one space that we believe could continue to do well. Apart from that, FMCG is another space where a lot of commentaries about rural sector picking up and growth being better than the urban. That is another space. Automotive is the third space where we believe there is a good flow of demand, and with some of the commodity prices stabilizing, margins have also kind of improved. So that's the third space. And then from the broader markets, we like some of the names. Recently, we have come out with new ideas from the broader market. On the real estate side, we came out with the initiation on Signature Global. It has become a leading real estate developer in the Delhi NCR market with a focus on the affordable, the low and mid-income housing segment. It has shown strong execution capabilities with a strong project pipeline of 30 million square feet to be launched over the next 2 years. Hence, we are expecting a steady 35% CAGR in the bookings. The company also looking to foray into the premium housing segment, which should add to the overall business growth. So there we have a strong positive view with a target price of 2,000. Today we come out with a new idea on Gravita India. It is a theme on the recycling, or you can say the entire theme of recycling, and so that space is also doing well. Gravita is a leading player in the recycling industry, especially with a lot of focus now on the EV side. The lead batteries and other batteries will be coming up. So the company is setting up. It does 88% of its business come from the battery recycling, around 8% from aluminium, and very small from plastics. So we believe that this company could continue to do well. We are expecting a revenue CAGR of 26% and PAT CAGR of 30% over the next 2 years. And we have a target price of 2,350 on Gravita India.
So those are a couple of names where MOSL is positive on. Thank you so much for sharing that with us, Siddharth. But coming to you, Srikanth, what's your take coming in on the realty pack? How is this space looking to you? Because it did go into some rough patch right after the budget. Right now, also the the sector is a little bit subdued. What's your outlook coming in for the realty sector in particular?
Yeah, I think we saw substantial outperformance in almost all the real estate stocks, and even index did really well. But now I think it is into corrective mode. It is just correcting from the heights. It is not at all like showing any signs of disturbance. I'm not seeing any major downtrend in the stock. I'm just saying the overall sector. But yes, there could be the possibility that we could see further more correction along with the overall trend of the market. But broadly, we are of the view that we should look for adding specific stocks like DLF, Microtech, Prestige. These are the stocks on which we are specifically bullish. And in this particular corrective phase of the market, I think we should look for adding them, because in all these stocks, we are expecting at least 20-25% sort of appreciation in next few months. So overall, it's a buy, and strategy should be to buy on dip corrections.
Let me come to you actually, Naresh. Let's talk about the IT sector, because today one sector that is trying to hold on and actually lend some support to the market has to be the IT sector. It's performing well in trade today. You have TCS that's seeing a good uptick, Infosys, all of them are seeing a good uptick in trade. What's your take coming in on the IT space? Do you think that it's a space that you can bet on and rely on right now?
So for now, waiting out for a further couple of days of follow-up action. So today's price action is strong. But if you look at, say, TCS, it needs to cross 4,300 odd levels for a momentum confirmation. Same way, HCL Tech, which has made a strong recovery from 1,300 odd levels. 1650 is a breakout point. So a lot of these names are showing interesting formations, but as of now, it's a one-day move. The good part is the correction has not been deep out here in the segment, and we've started seeing a recovery. So out here would wait for follow-up action tomorrow. If it sees further action in the next couple of sessions, then maybe you are getting into a trend across the IT pack. So strongly on radar. For now, good price action.
Action, that's the IT sector, and strongly on the radar. But Siddharth, the one entire space that has been on everyone's radar right now has to be the new age tech stock companies, or the new age companies, or the class of 2021. All of them have seen a good comeback move, actually, be it Nykaa, be it Policybazaar, or for the matter of fact, Paytm as well is back from the lows. Zomato has been actually winning all the way through. What's your take coming in on that space? Do you think that a relook is warranted?
Yeah, I think that is a space that keeps buzzing, and rightly so. If you look at some of the numbers, Zomato came out with very strong numbers. Even PB Fintech, Policybazaar came out with strong numbers. Nykaa is now showing some improvement in numbers after a couple of weak quarters. So by far, these companies have realized that they have to sooner or later focus on the part 2 profitability, where at least the e-commerce companies, they have looked at increasing, not only started charging, but then now increasing the platform fee, which is leading to improvement in the overall operating profitability. So within that pack, what we like is Zomato. We have a target price of 300. We upgraded the target price after the recent results. Q1 far ahead of expectations. And if you look at the core food delivery business, that is pretty steady. But what surprised on the positive side was the Blinkit business, where the gross order value increased by 100%. We believe that, again, these kind of opportunities, high growth opportunities, is kind of once in a generational opportunity to invest and participate in, especially the retail, grocery, and the e-commerce space. So that should lead to a healthy profitability over the next few years, and the re-rating should continue for the likes of Zomato. So that I would say that within this pack, we like Zomato with a target price of 300.
Target price of 300 rupees per share coming in for Zomato. I'm sure that all of them would be rubbing their eyes and not believing the targets that are being set for this company. But the fact that the financials talk for themselves, the way the company has made a comeback and has been living up to it. Thank you so much, Siddharth, on that note, for joining us on the show and sharing your top calls as well as the sector outlook going ahead. But before we move ahead, let me head across to Ansh, who's standing by to tell us about the volume buzzers of the day. Ansh?
Right, so Divis Laboratory will be the first stock in focus. As you can see in the chart as well, the stock was hovering within its consolidation pattern from last 12 consecutive sessions, and today it has given a good breakdown from that consolidation pattern. In addition to this, the stock has also slipped below its 20 DMA. Also in future market, we are seeing open interest going up by around 10%, indicating strong short build-up, which is a very bearish sign for the stock. Apart from this, fintech will be in focus, as the stock was actually consolidating within a sideways range, and today it has given a very good breakout on upside, which is very positive, and this breakout is backed by a volume of over 11 times its average trading volume of last 20 sessions, indicating very strong participation in today's breakout. Tech Mahindra will also be in focus, as the stock has given a breakout from its 7-session consolidation pattern and has been forming higher highs from last 4 consecutive sessions, indicating very strong bullish sentiment in the stock. Also in future market, we are seeing open interest going up by around 4%, indicating long build-up, which is also one more positive sign for the stock. TCS is also in focus, as the stock has also given a breakout from its 7-session consolidation pattern and has surpassed above its 20 DMA level. Now, apart from this breakout stocks, there are high chances of Piramal Enterprise, GNFC and NMDC getting into ban list on Friday. So keep an eye on the stocks.
All those are the volume movers and the stocks to watch out for. But which are the stocks that you need to watch out for when it comes to the BTST ideas? Then, Naresh, what are your BTST ideas for our viewers, given the fact that tomorrow is a day off?
So the BTST idea first would be a buy on Naukri Info Edge. What we've seen is good momentum across the holding companies of this stock. The stock is back to 2021 prices on verge of a breakout. Stop loss at 7150, target price of 7400. Second is the buy on HDFC Life, which has been finding support around 680 mark, the lower end of the range. So keeping a stop loss at 683, target price of 700.
Right. And Shrikant, what are your BTST ideas?
I think, see, I would like to focus more on metal space because there we are seeing a lot of momentum on both the sides. Precious metals are doing well. Non-precious are under a lot of pressure. In that specifically, Titan looks good, which is around 3400, 3405. From here, the stock can move to the levels of 3500 or 3550. That's the overall view, and it is forming nice triangle formation. Even if we go through with the news flow, then that is also positive for the stock. So I am of the view that 3340 should be the final stop loss for creating any long position on Titan. The other stock on which we are bearish is Steel Authority, and the reason is that the stock is comfortably trading below the important average line of 200 days simple moving average. So based on it, the stock can fall to the levels of at least 115 or 110 in next few sessions. The overall space, I'm going to say, especially those who are like having the business of iron ore, they are under pressure. So I am of the view that Steel Authority should be on the shorting side with the stop loss at 132.
All right, so those are the BTST ideas coming in from both of our experts. But let me come back to you actually, Naresh. You had a short while ago, Siddharth gave a target of about 300 rupees per share coming in on Zomato. Are you envisaging it anytime soon coming on the chart, given the fact that the stock, after the mild correction that it saw, it is back to winning ways?
So given that it has already moved up quite a bit, and in the last 3-4 sessions, we are seeing some bit of a selling pressure out here. So I would expect, yes, the trend is still up, but some bit of a pause for at least a few weeks. And then maybe it can again make a comeback. For now, one should keep a strict stop loss at 240 given the rally.
So that's the view coming in on Zomato. Let's take a quick look at what the markets are doing at this point in time, given the fact that we are in for a truncated week. Tomorrow is a day off. Today, the markets actually, most part of the market is being held higher by the IT sector in particular, because that's among the top sectoral gainer. In today's trading session, you have the IT sector seeing an uptick of about 1.6%. It's the metal sector that is weighing heavy. That's on back of a negative news flow that's impacted the entire sector. You have pharma that is taking it a bit easy as well. Even the PSU sector in particular is actually seeing a bit weak move. Auto is subdued in trading of actually flat with a positive bias, and the advanced decline ratio actually, as we come to the end of the trading session, is actually more tilted towards the losing side. But on that note, thank you so much, Naresh as well as Shrikant, for joining us on the show, sharing with us your ideas as well as the sector overview. But I will take it across to Snehi to wind us down for the trading session. Snehi.
Well, absolutely. Let's take a look at how the trading session today has panned out. And Nifty absolutely flat, but with a slight positive bias, 24,155. Sensex also 0.2% higher. India VIX is the one to watch out for. Significant cool-off being seen over there, 4.5% lower, and at 15.44. There you have it. That's India VIX. Nifty Bank also 0.2% lower, so slightly pressured in today's trade. However, the broader markets failed to outperform the benchmarks today. Nifty Midcap and Nifty Small Cap both were trading with cuts of around 0.5%, both under pressure today. Let's take a look at some of the sectoral movers, and like Cheryl mentioned, Nifty IT, the clear outperformer in today's trade, up more than 1.5%. You had Nifty Auto also that ended the day in the green. However, on the flip side, Nifty Metal was your biggest loser, and lots to talk about on the metal front as well. You had Media, Pharma, Realty, FMCG, all of these sectors, have closed the day in the red. Now let's talk about some big buzzers, and on the back of the Supreme Court verdict that came out today about the state's retrospective tax coming in on mining, you had a whole host of counters in focus, the likes of Tata Steel, SAIL, Hind Zinc, Vedanta, Coal India, JSW Steel, all of these stocks seeing some cut coming in, and a shade of red on these stocks as well. Some other newsmakers today, Mascot Dock numbers came during the trading hours. Net profit has almost doubled, so that stock did pretty well, 3% higher. You had EID Perry, margins contracted a little bit, so let's just see what that stock is up to, and down almost 3%. You had HAL standalone, net profit has seen quite the increase at 76%, so that numbers also look pretty good. But however, the stock is under pressure. 1% lower is where HAL is all set to close. Ethos also revenue was up 25.6%. You had Kirloskar Industries numbers coming out. Net profit fell 30% year on year. PB Fintech, although a clear outperformer in today's trading session on the back of the exclusive news that health insurance companies could be hiking their premiums. PB Fintech's up almost 6%. Yesterday, though, we had Manappuram inline set of numbers coming in, brokerage notes trickling in. Piramal Enterprises, one of the top losers today as well. Poor set of numbers coming in. Brokerages are not quite upbeat on this stock, and management has also commented on some pressure on the NIMs being seen, so almost 10.5% cut coming in on Piramal Enterprises as well. Muthoot, however, good set of numbers. Bernstein has also maintained their outperform rating with a target price of 2,000, but also under pressure. 2% lower is where Muthoot is all set to close. Gravita India and Max Estates, we had two initiation notes on these stocks. So let's see what Gravita India 7.5% higher. However, on the flip side, Max Estates has failed to hold its ground in today's trading session. Other than that, you have EPL, Chennai Petro, Paytm, Uno Minda, Equitas, Adani Energy, all of these stocks in the green. However, on the flip side, you have HEG, NMDC, BEML, PNC Infra, you have Suzlon, Praj Industries. All of these stocks have closed the trading day in the red. But well, yes, to sum it up, very flat on the Nifty. 24,143 is where we shut shop for the day.